So unemployment was just reported this morning and it came in higher than expected. It came in at 4.1%, but non-farm payrolls came in at 206K versus the expectation of 191K. But the big question a lot of people are asking is the big focus has been the unemployment rate. So how is it that if we went from 4% to 4.1%, showing that unemployment is going up, meaning that more people are either losing their jobs or getting laid off. Nonetheless, unemployment rate is going up. Yet the market is reacting in a positive way. This might not make sense to the average person, and I wanted to quickly explain this in the most simple way. We're not going up based off of unemployment rate going up. We're going up because of how and what happens when unemployment rate goes up based off of the current situation that we are in. Again, for those a little bit newer, the Federal Reserve, we've been waiting for them to cut interest rates. So when they begin to cut interest rates, you know how it's really expensive right now to borrow money? When they begin to cut interest rates, it's going to be less expensive to borrow money for people like you and I and for businesses. So therefore, maybe businesses can borrow more money and hire more people. So the whole point of seeing that unemployment rate is going up normally, and again, this article tries to kind of summarize. It says, overall, a moderation in payroll in Q2 coupled with a rise in unemployment rate and a slower growth path, that's the biggest thing, with a slower growth path suggests by recent data bolsters that the case rate for rate cuts this year. So what that is trying to explain in the simplest way is that the domino effect is the Federal Reserve is going to see that data and be like, hey, unemployment rate is going up. Now, 4.1% is not high unemployment by any means. But when unemployment rate is going up and if it continues to rise and they see that the economy is slowing down, that's all the Federal Reserve wanted to see. So once they see that it's slowed down enough, then they can possibly justify cutting interest rates sooner, so therefore trying to boost the economy further and quicker than what was originally expected. So the whole point of unemployment rate going up and the market reacting in a positive way is just because the market can foresee that, okay, the Federal Reserve might want to start cutting interest rates sooner to help combat higher unemployment. That's the reason that the market is going up, not because more people are losing their jobs, that the market's like, hooray, let's go up. No, it's because, okay, well, because of this, the Federal Reserve will most likely do this. That will, again, cut interest rates, boost the economy, because when interest rates are lower, people tend to spend a little bit more money because it's less expensive to borrow money, therefore boosting our economy, sending stocks and companies higher for longer because more money is being circulated in our economy. Does that make sense? So just wanted to make sure that I quickly explain that. Overall, NASDAQ market is up again, nearly 1%, hitting all-time highs again. And it's not just NASDAQ market alone. I mean, we have a handful of different companies. We have Microsoft, higher highs, higher lows. We have Apple, higher highs and higher lows. We have Amazon, higher highs and higher lows. And let's not forget Mark Zuckerberg's Meta. Where's that bad boy at? So Meta also with a 4.5% run and still running. If anything, Meta looks the most bullish today, but again, extremely overbought. You guys let me know down in the comment section. Is it just me that feels like the market is so overbought that I almost don't even want to buy at these levels, but it's definitely so bullish that I definitely don't want to consider being aggressive with shorting because direction is against you. So again, this is something that we talked about today during our live trading session. And these are the conversations that we try to have every single day because market conditions are always changing. When markets rally, when markets drop. My thing is I always want to make sure that our beginners have a full understanding of what exactly is going on with the market and understand the why. So if you ever want to tune into these live sessions, I want to remind you, it's a one-time payment, lifetime access, and yes, you'll get to watch these live trading sessions every single morning right at market open. So that's that second link in the description down below. And other than that, I hope that it earned a thumbs up. Please consider subscribing. And like always, let's make sure that we end the year on a green note. Take care, team.